According to data released recently by the Statistics Office, Kenya's economic growth slowed for the sixth quarter in a row as a result of below-average rainfall, increased inflationary pressures, and anxiety over the August election. According to the Kenya's National Bureau of Statistics, third quarter ended in September saw a decrease in economic growth of nearly half, from 9.3% to 4.7% compared to the same period last year. The rise of GDP, a gauge, of course, of national economic production during the review period, was also slower than the second quarter GDP growth rates of 5.2%, 6.8%, 7.4%, and 9.3% that year. Inflation, according to the Statistics Agency, in Kenya decreased for the second consecutive month due to lower food costs, but remained above the central bank's upper target of 7.5%. In measure, the cost of living over the past 12 months, inflation decreased from 9.5% in November to 9.1% in December. Joining us to discuss further, we have Johnson Nderi, Corporate Finance and Advisory Manager with ABC Capital Ltd. Johnson, thank you so much for joining us. What do you make of those recent GDP figures coming out for Kenya?
Well, we're looking at these numbers, and I think they're not too bad. If you look at the past, the previous four growth rates over the same period, looking at 2021, where we clocked 9.3%. The year before, that's because the year before that we did 3.5%, but we did 5.3 and 5.0% in 2018 and 2019 respectively. So when you look at 4.7, relatively, obviously, it's the lowest in the last 5 years, but you could argue it's within range. We know the factors that cause this. The first one being the global inflation rates, because that hindered trading a bit. And of course interest rates, attendant interest rates that had access to credit a bit, but also agriculture, especially at subsistence level, was impacted by lower rainfall. So also that was problematic. But when you look at it on the whole, I think it was okay.
Are there any promising sectors as we look? We're in a new year now. Tea exports, horticulture, and so on and so forth, pretty important to Kenya's economy. Any sectors that I guess you have a positive outlook on with respect to its contribution to GDP as far as this year is concerned?
Yes, certainly. You named one, agricultural, especially commercial agriculture. We've seen an upward trend and a recovery in some sectors, especially coffee, tea, fruits and vegetables. Those we expect to go strongly. We expect perhaps to see a recovery in hydrology, and therefore production of hydroelectric electricity. For us, that's important because it lowers our cost of energy, because hydroelectric energy is probably one of our cheapest sources of energy. So those two, I think, off the top of my head, we should expect to see growth.
What do you make of the central bank's role in boosting growth, I guess, through its monetary policy tweak, and even the government with President Ruto coming in and promising a whole lot with respect to removing fuel subsidies, keeping subsidies for production? How do you think the pathway to growth from the president, from the government, also through the central bank, is going to work out this year?
We don't expect much help from those quarters. Monetary policy, let me start with that, because inflation rates is outside of the CBK range of between 7.5% to 2.5%. We expect to see continued tightening, and of course, because of pressure from outside, we expect to see a tight monetary policy. So we don't expect any help from that. From fiscal policy as well is problematic. We've got huge deficits, debt that is running hot, so that needs to be brought under control. And so I think even from the fiscal policy perspective, it's difficult. And actually, that's the reason why the president has talked about cutting subsidies because he needs to make fiscal headroom to do some of the things that he promised he would do. And also just so that the signaling from the prices can be more, shall we say, legitimate. So because of those two concepts or ideals, I think the government is unlikely to quote unquote boost the economy with using fiscal policy as a tool.
I think the IMF outlook for Kenya GDP growth for this year is 5.3%. What's your outlook for the economy as far as the challenges ahead and opportunities? How do you think things are going to play out?
So 2022 is over. So the question is, how much did we grow by 2022? And I think that's not too much out of the out of range, because but I expect it to be lower. So we are talking about maybe 5% growth. But going forward, we expect to see a lot of pressure simply because of the government's needs to manage fiscal policy, and on the other side, monetary policy also will likely tighten. So because of those two dynamics, we expect to see weaker growth from Kenya in 2023.
As far as the inflation numbers are concerned, we're seeing a deceleration. Is that encouraging? What's your look or reaction rather to the inflation numbers?
Yeah, so they came in, I think it's 9.3%, still a bit high. It needs to come down to below 7.5%. So the only, thing worth taking from that is that growth rates are headed in the right direction, but they need to come down faster and to come down below 7.5%. So that's why we're looking at it.
Okay, so here's something interesting. I know in December, the Energy Authority or Regulatory Authority kept fuel prices at their current level because of the festive season. I think we talked about this last time you were on the show, but then they said they would review those fuel prices again, I think on the 14th of this month. So, and Ruto says he wants to remove fuel subsidies. So if you remove fuel subsidies, I imagine that costs will go up and that might filter through to, goods, services, transportation. So isn't that, I guess, a headwind, or isn't that an accelerator for inflation going forward if those subsidies are removed?
It depends on how that's done. I don't think it will be inflationary. What I suspect will happen is if they allow prices to go back to their economic levels, one of two things will happen. Either there'll be a slowdown in production, but also we are likely to see lower consumption in other sectors. And I think the second scenario is likely what is going to play out. So activity in production and distribution in the economy will remain the same, but because of constrained budgets, we'll see consumption in other areas fall, and then prices can actually come down as a consequence, because that's a monetary policy issue, I believe. And my thinking is it will be very difficult for consumers of distribution services to pass on the costs to other people. So likely we're going to see thinner margins in other areas, and or likely lower uptake of other goods and services. But I suspect, and not just suspect, but my expectation is that those subsidies will be removed so that we can see the real economic prices for consumption of fuel, and maybe that will even spur more improved technology in terms of the consumers of those services, of transportation services.
All right, fuel subsidies, a big topic everywhere. Kenya, Nigeria. So we'll see how things play out. Johnson Nderi, Manager, Corporate Finance and Advisory at ABC Capital Ltd, joining us from Nairobi. Appreciate your time. Always a pleasure talking to you. Thank you so much.